Welcome back to KTN Life and Style. This is Thursday, Inspirational Thursday. And talking about inspirations, we love money. I love money. You want money. So we've got Money Maker for you. And in studio today, we've got Ken Gichigia, who is Chief Economist, Mentoria Consulting. Yes?
Yep.
I got that right. I was going, the R's there are a bit.
How's
How are
yeah.
you, Ken?
I'm very well. Thank you for having me today.
You're welcome.
Yes.
Chief Economist
Yeah.
and money. You see how they go hand in hand? Like I said, you want money, I want money. So what does Mentoria Consulting, or you personally, the chief economist, do for me and my money?
Right. Well, thank you very much. The role of an economist is pretty much to look at the entire market and assess where the opportunities for people to invest their money. And of course, in Kenya, we have a growing middle class, and we are seeing a lot of people starting to save a little bit of money and have some disposable income. One of the challenges we see is a lot of people don't exactly understand where to put their savings into. Or if they do, sometimes they just follow what they see other people doing. They don't do research, they don't do due diligence. So as an economist at Mentoria Consulting, we advise clients on what are the best places to put your money, where you can get the best return and achieve your life's objectives.
That's pretty impressive. We're going to talk about something in particular today concerning money, and that
Yes.
is investing in the stock exchange.
Absolutely.
And I'm sure you are an expert in this. And most of the questions that you will see, like I have a friend who's called Greg, and
Right.
Greg was telling me, Mukali, I can't put my money. Like, how real is it? How real is it? I'm going to put money there, and then I'd rather nieke pesa yangu mahali naiona. You get? And it's not just
Right.
his mentality. It's most of Kenyans' mentality. Like, I just want to see my money grow. If he's
Somewhere.
up, naeza yenda nichukue. So
Right.
let's talk about stock exchange and how real it is in Kenya.
Oh, it's very real. The stock exchange is what we call an asset class, and there are many asset classes. A typical treasury in a bank looks at foreign exchange. You could invest in bonds, you could invest in shares. The stock market is only one of very many asset classes in which you can invest. And you're right, it's become very, very popular, especially since the last 10 years, since we did the Kengen IPO, and of course Safaricom.
Yeah.
Safaricom was one of the largest IPOs, and it's for most people, a lot of people don't understand how to get into the stock market, and there are three very simple ways of getting into it. Number one, you need to conduct some research. Do a due diligence on a company. Let's say I like Safaricom, or I like Equity Bank, or I like Kenya Airways. I need to do some research. Which industry is this company playing in? What are their profits? What are their margins? Who's the ownership? Once I've identified, done some research, then I need to contact a stockbroker. This is somebody who's supposed to help me in the process of buying and selling my shares. And then lastly, I need to open what is called a CDSC account.
What is that?
Now, CDSC stands for Central Depository Settlement Corporation, and it's a government body that's been mandated to help people electronically buy and sell shares. So gone are the days where you'd have to have a physical share certificate. A lot of people nowadays are buying and selling online. And most of your stockbrokers will actually help you buy and sell your shares online. So that's the last stage. And, you know, research needs to be at the forefront of your investments, because a company's fortunes might be very well today, but in the next 3 months, something in the industry might change. So you need to constantly be reading the news, talking to your friends or your colleagues who are in the investment networks, and constantly reviewing your investment assumptions.
But one thing for sure is you're getting into an industry where you're not sure if tomorrow it will be working or not. So there's that risk. How do you go? How do you research that bit of it?
Exactly, and that's a very good question. A lot of people don't know where to get the research. First of all, you'd easily start with the publications, something like the Business Daily, for example. It's a great source of telling you who are the new appointments into a company, what are the various company strategies that each company is rolling out. So reading that maybe on a daily, on a weekly basis sort of helps you get a feel of what's happening. Because sometimes you have company-specific information and sometimes you have industry specific information. Sometimes the industry could just be like hospitality, for example, may just be sometimes under threat, maybe because of terrorism. So you find a lot of the listed companies in the hospitality sector might have an issue. Another form of research is watching television news, the business news.
Yeah.
You know, those are great, easy, free modes. And then there's the internet. Finally, I mean, the internet is really, you could go to the stock exchange website, the Nairobi Securities Exchange website, you could go to the central bank website, you could go to the websites of each of the companies you're thinking of investing into. So the internet has opened up all this information, and your stockbrokers sometimes also publish reports on various trends. So if you put all this information together and make sense for yourself, then you'll know, I think I want to invest in this, and I think I want to sell this. Yeah.
Let's talk about the stockbroker, because first of all, you do the research, then you
Right.
get this broker.
Right.
Why you smile? You know where this is going.
I do know, yes.
Well, the brokers come with good and bad sides. You can get a good one, you can get not a very good one. So how do you go about verifying that, you know, this guy will give me back my money, that he will keep me informed and make sure that probably I am doing the right thing?
Well, the first thing you need to understand if your broker is a licensed broker.
See now?
That's the number one place, because there are a lot of, sometimes you can easily get into a situation where you are dealing with an unlicensed. Now, the Capital Markets Authority, on their website, they have a list of all the licensed brokers. So you can be sure that the CMA has done its due diligence, you know, these are the people. Then also you could talk to the people that are your friends and family. You know, what's the experience with broker A versus broker B? You know, sometimes people will give you feedback. For example, one of my friends, you know, was pretty angry with his brokerage firm because they failed to execute a purchase order despite them being told to purchase a particular stock. So they're very frustrated, so they had to switch. So when he told me that story, there's no way I could go to that broker, because, you know, you could easily miss a great investment opportunity because you've given a mandate, but your broker has not executed that mandate for one reason or another. So obviously, listening to people and gaining who has good experiences, who had bad experiences, normally that would tell you who's a good person to deal with. And the track record always speaks for itself.
All right. When you talk stock exchange, the one thing that comes to mind is Wall Street. And
Right,
how
right.
busy it can get. They put it in movies, you will see it everywhere, and how busy it gets. How one moment stocks are going up, the next moment they're all collapsing. Are we that big here? How are would we even be compared? Where are we? Rate 1 to 10? Nowhere?
We are getting there.
Okay.
We are getting there.
What's the big difference?
I mean, our economy was liberalized in the last 20, 25 years. So pretty much you're comparing with an American economy that's been probably liberalized for centuries. You know, if you go to Chicago, for example, where they have the commodities exchange, these exchanges have been there since the 1850s, 1860s. You know, compare that with our very nascent Nairobi Securities Exchange. It used to be called the Nairobi Stock Exchange. Now it's the Securities Exchange, where you can do things online. These are developments that happened over the last 10 years. I mean, for a lot of people, Safaricom IPO was probably the first time
They heard about
they
it.
participated, or the Ken Gichigia IPO. These are events of the last 10 years. So we're still in our early days, but it means there's also a lot of opportunity, because in the same Wall Street, because of the huge access to information, it means the margins are very thin, unlike in Kenya where you can get massive margins because there's a lot of information asymmetry.
That's
so there's
something
still
good about
it's a great thing. So
Yeah.
the people who have really invested in the stock market over the last 10 years, a lot of them have, you know, made multiples, you know, of what they initially put in. So that's something you cannot get in a Wall Street or in London or in Hong Kong. So we still have huge benefits to that.
Back to my question then. So 1 to 10, where are we?
I mean, probably
Not anywhere. No, you tell me.
10 being extremely liquid. I would say probably like a 5.
Oh yeah.
Yeah,
Okay.
I think we're going there. Especially with technology,
Yeah.
we are able to leapfrog a lot of the things that the West had to go through. You know, especially if you can do all of these things over M-Pesa, dividend payments over M-Pesa. I mean, mobile money, for example, it's still very new in the West, in the States. You know, so Mark Zuckerberg coming to study M-Pesa. You
Yeah.
know, so if you can use M-Pesa to buy and sell shares, You
That would
know,
be amazing.
those are the kind of things that we can introduce to the global space that nobody ever thought about. So I'd give it a 5 in the sense it's still growing. But I think in terms of promise, I think it's, especially with a settlement foundation like M-Pesa, I think we have a lot of promise in this country.
Then what would you say is the factor that is holding us back? What is holding us back from exploding? Because we've got whatever we need.
Right.
Yeah.
I'd say information and,
Okay.
of course, fear. You see, a lot of people, you know, you grew up watching maybe the charity sweepstakes where somebody wins 100,000 shillings and they want to buy a plot of land or they want to do very, you know, very basic things. And these are very great investments. Our level of sophistication still hasn't gotten to where it can be. But a lot of younger people now are more exposed. People are watching Wall Street. So I'd say it's fear for once. You know, nobody wants to be the first person in your group of friends to try out, you know, something. And of course, we've seen, like, right now we are seeing banking shares, banking stocks
Yeah.
really falling. So people are scared. They're like, you know, my piece of land can never depreciate that quickly. So I'm going to stick with my piece of land. So people sometimes looking for quick gains, and
Yeah.
sometimes quick gains are not always there in the stock market. In fact, somebody like Warren Buffett would tell you you need to hold for the long term, because right now, for example, banking stocks are extremely low. A lot of people are selling, but the people with a huge eye for opportunity are actually buying right now because they know in the next 1 year they're
Probably
going to
it's gonna
be,
go up.
you know, they're going to be running to the bank, no pun intended. Yeah.
Okay. How much money are we talking? Mukali is here. She wants
Right.
to invest.
Right.
Safaricom, whatever IPO is being launched. So
Right.
how much money are we speaking?
I mean, it's as little. I mean, right now, you have to buy shares in 100 units, for example, and that's the minimum. If you wanted to buy anything less, you have to go somewhere called the odd lots purchase. But let me give you an example. There's something called M-Akiba that's going to be launched in the next 1 month, and this is going to help anybody with as little as 3,000 shillings buy government securities.
Wow.
Treasury bills, treasury bonds, that's another asset class aside from stock markets. Before that, if you wanted to buy a treasury bill or a treasury bond, you have to have minimum 50,000 shillings. Now with your 3,000 shillings in your M-Pesa, you'll be able to buy, you know, a T-bill and get maybe 10% interest. So definitely we are moving towards democratizing access to investment opportunities. So chamas, people are saving little money and they're still able to buy stocks, shares, exactly. I mean, a typical share would be in the 20 shillings, 30 shillings. So, I mean,
Yeah.
even with like a 3,000 shillings, you know.
You're good to go.
Yeah, you're good to go.
And how long do I have to wait so that I can start reaping my benefits? I want money. So if I
Right.
chose not to put my money where I can go grab it,
Right.
and I've decided to give you money so that you can keep it somewhere else and then I'll get more money,
Right.
how long do I have to wait for?
Well, let me correct you. It's not a mutually exclusive investment.
Okay.
Yes, do invest in what you call the tangible wealth, your shambas, your car, or whatever, but also diversify your portfolio. Don't let your portfolio always be 100% dairy farming or 100% shamba. Try and think of, can I do 20% real estate? Can I do a bit of 20% stock market? So so it's not mutually exclusive. They're actually going together, because the
I've
beauty
had-
of
yeah.
stocks, you know, you can actually liquidate them instantly. Unlike a piece of shamba, sometimes it may take a much longer time.
Or build a house and then
to-
it's brought down.
Exactly. So what I always tell my clients is diversify your portfolio. And that's why I think Kenya as a country is doing very well. We are a very diversified economy. We are not like, you know, Nigeria, which is dependent on oil, or South Africa, which is very dependent on gold. In Kenya, we are very diversified. So our own portfolios need to be very diversified. Yeah.
Okay.
Yeah.
I've had a saying that billionaires do not get their source of income from, just one channel. They have multiple channels where they
Exactly.
get their money from, and that is what we're doing today. Remember our platforms on social media, KTN Life _ Style on Twitter and Instagram, on Facebook, KTN Life and Style, and you can send that SMS to 22840. We'll take some time and look at those questions. When I want to invest in stock exchange, because that is majorly what we're doing
Right.
today, Ken, is what are some of the, do I need to go to class to study those things if I don't know what bond is or what share is, or that is the work of the stockbroker who now comes and tells me? Or how do we get these this knowledge
Right.
that instead of running to broker our shamba,
Right.
or now people are doing quill, you can run and get your two quills there and start farming.
Right.
How do I get this knowledge?
And there are many ways for that. A, as I said, you can read the daily papers. They always explain some of these things. B, you can go on the internet. There's a great website called Investopedia.
Investopedia.
Yeah, this is like the Wikipedia for investors. Just type in the word, bond or a stock, and it explains and gives you so many, explanations to that. You could actually call a friend or somebody in your chama. Most chamas have somebody called maybe the head of investments. Talk to them. So there is a plethora of information on where to get. So it's pretty much what suits you best. Some people like to do their own personal investment research. Some people prefer to maybe call a broker. Some brokers are pretty good. They'll explain this to you, but some brokers just want to trade and make a commission. So if you have a good broker who would take time and tell you, for somebody like you, I'd advise you to think of sort of like a long stock as opposed to a volatile stock.
And what is that?
So the volatile stocks, these are stocks that change prices almost daily because maybe they're dependent on oil prices, for example, which are constantly fluctuating. Then you have like stocks that pretty much stay where they are like for the longest time. They're not really influenced by the market dynamics per se. So somebody and there are two types of investors, by the way. There's what we call a risk-averse investor, somebody who just wants to minimize risk. Exactly. So you want that stock that almost stays the same price, but there are people who have a high appetite for risk. So they want to sort of do the daily trades, which is a lot of Wall Street, as you are referring to. They love those, that's where the real opportunities you can make. We can buy at 10 today and sell at 20 tomorrow. There are people who love that kind of, that thrill of that.
Is one better than the other?
For an entry-level investor, I'd say be a bit more risk-averse, sort of like play with what we call the safer stocks. Then as you get to understand how the industry works, as you get to understand what controls the industry, then you can be able to sort of like play on the more riskier end of because if you don't have the wisdom and you invest there, you'll end up losing a lot of money. People lose millions of dollars every day from poor judgment. So precisely.
Okay, I'm looking at Twitter here, and Kitua is asking, what do I need to do to become a stockbroker?
Wow. If you go to the CMA website, the CMA stands for the Capital Markets Authority. They are the regulator of everything that happens in the equity space, in the stock market space. They have forms that tell you all the guidelines for you to be a stockbroker, the minimum capital, the kind of, because capital is one of the big things, the minimum capital injection, and they keep changing.
How much are we talking?
I mean, I would need to check this because it keeps changing along a lot of time. Like the central bank, for example, it's in the millions, definitely.
Wow. Okay, Kitua now, Okay,
And of course, you need to have some credibility. They need to understand, who your staffing is. Do you have experience? Because you're dealing with people's, people's money. These are people's lives. So every time they refresh, every time they make a change in the legislation, they always refresh. But if you go to the CMA website today on your mobile phone, you'll be able to see what the latest guidelines are right now. Yeah.
You don't have to go to school for this. You just need to have
No, you don't.
money.
You just have to have a curious mind.
And think outside the box.
That's it.
And predict. No, you can predict.
You can forecast.
You can forecast. That's the word.
Right. But as you say, it's about curiosity. I think sometimes people fear getting into the unknown. People fear getting out of their comfort zone.
I would say I fear stock exchange. I have seen some people lose a lot of money.
And I'm sure you've also seen a lot of people make a lot of money. For example, I mean, just think of something like Equity Bank, for example. Had you bought a share back in the early 2000s, I mean, by now you'd be well into your millions. you know. So yeah, there are great, fantastic stories out there. But as you say, it requires a bit of knowledge and research. If you're not a curious person, if you're not into reading and studying and talking, then I'd say think about it first. But if you love business, if you love understanding, if you have confidence in a particular company, the leadership of that company, the strategy of that company, then definitely invest in it.
When you're having conversations about people who invest in shares, the one thing that comes to mind is someone who's just watching television. They don't go to work. Just their PJs in the morning,
Right.
turn on the TV, their Investipedia or one of those magazines,
Right.
checking out how the stock's looking. And they
Right.
don't have to work a day in their lives. Is that it? No, well, if it goes well.
I think that's a Hollywood
Oh, yeah?
dramatization. Most of the people in the stock market are your regular professionals who just decided instead of having all their money in one area,
Yeah.
let's try something new. And you could also try the treasury bills and bonds. So that's definitely, of course, there are people who are the billionaires who could easily wake up in the morning, read a paper and give instructions, make 1,000,000 shillings. But, you know, we're talking of 3, 4, 5 people.
In
you
Kenya.
know, yeah. So, yeah, for the vast majority, this is actually, if you go to any AGM for any of these major companies, you'd be surprised by who are buying these stocks for these companies.
Who would you say? Is it the young, the old,
I wish you
middle
can go
class?
to an AGM. It's normally people sometimes in their 40s and 50s or very humble background. Sometimes are not even very fluent in English.
Oh, wow.
They're Kiswahili speaking. Pretty much just maybe have 200 shares. You know, I wish you can go to the AGM. You'd be so surprised. Sometimes they're coming to get the freebies at the AGM, the umbrellas. You know, it's hilarious. But you'd be surprised. Sometimes those are the people,
Yeah.
you know, who are actually playing. So it's not sometimes your typical sophisticated metro,
No.
urban. No. Sometimes you'll be surprised. It's actually people sometimes in the rural areas who come to Nairobi for the AGMs from as far as Kitale, Nakuru. And granted, have small shares, but yeah, they have taken the decision they want to be part of this company's future. So I would say it's something for everybody, but you have to decide for yourself, obviously with the guidance of maybe a knowledgeable expert or a stockbroker, sort of where to begin. What's your entry level? Are you doing well in your entry level? Then maybe you can graduate to sort of like higher end. Because you'll find stocks for 20 shillings, you'll find stocks for 600 shillings, you know. So gotta choose. And
Okay.
yeah.
Well, today is Inspirational Thursday, and on that money-making note, I'd like you to just give one piece of advice in terms of stock exchange to everyone who's listening. Maybe you can just use that camera right there.
Right.
Okay.
Well, if you're considering investing in the stock exchange, think wisely, do your research, do your due diligence, start small. Sometimes they say baby steps are the best place to start. Then based on that experience, graduate into where the big boys are playing. But the stock exchange has made some people very, very wealthy in this country, so it's definitely an investment opportunity that you or your chama or your family should consider.
All right.
Yeah.
Thank you so much, Ken.
Thank you very much, Mikali.
That was eye-opening. Thank you so much for choosing KTN Life and Style. This has been inspirational, motivational. Now you know where to take your money, as little as it can get. Don't get so scared. Fear is one of the things that really hold us back. Well, that is it for today. Let's do this all over again tomorrow. Remember, it's Friday, so it's Feel Good Friday, and it's all about entertainment, gossip, and having a good time. Well, have a good day.